Hey traders, welcome to this week's Forex Focus. I hope you are all doing well. You've all had a good week in the markets. This week, as with every week, we're going to look at the charts of the major currency pairs to see what the movements are looking like, what opportunities may be setting up for the week ahead. Now, over the past few weeks, we've been looking at dollar strength coming back into the markets. There was a bit of a pullback going into the beginning of this year and obviously in towards the beginning and middle of February, and we've been looking for that pullback. So we're looking for pairs like the Aussie dollar, the euro dollar, the pound dollar to sell off. And finally, this week we got that. And we got that in a big way, which is a good thing. So it meant that we were able to take some nice profits on our positions. But now, of course, what we need to do is we need to look at what opportunities are setting up for the week ahead. So how is it that we're going to play into this dollar strength? Is there anything that we can do immediately, or is it going to be a case of maybe waiting for a bit of a pullback? So let's take a look, or let's start off by looking at the Aussie dollar. If we take a look at it on the, in fact, we'll probably focus primarily on the daily charts today. But if you look at the daily chart here, we identified a few key levels where we felt that the market was going to turn around at. We said either this level over here or at the level just above the 0.6439. What so happened is that actually it was sort of in between there. I advise you to look at using a 2 ATR stop loss, so looking at 57 pips, about 120 pips there, which essentially for this position here, taking an immediate bounce, an immediate sell from 0.6362 would put you up around this sort of level over here. So above both of the levels there for your stop loss. You've got the first position in here, and then you've got a second position in over at the top there. And then from a take profit perspective, you can see that the market went on to your 1-to-1 120 pip stop loss within a few days of actually triggering into that trade. So that's a good thing. But as I said, what we now need to do is we need to look at, well, how is it that we're going to address the market this week? Because what we don't want to is we don't want to, try and get in on a move that's already happened. That's something that a lot of newbie traders or retail traders tend to do. They see a move that's happened. They think, okay, I don't want to miss this. This is the one. And then they end up getting in late. The market turns around and they wonder why they get stopped out just as soon as they get in. This move has already happened. We've already been talking about this for a few weeks. So if you weren't in at this level over here, which we previously identified, that's already been and gone. You can't take this trade right now. What we now need to do is either jump down to actually pretty much the main thing that you can do is look at the shorter term time frame if you want to take this tactically into next week. If you're willing to wait a little bit more, then you could look at trading from the daily chart. But really, we're going to focus on the 4-hour charts for the major currency pairs for the week ahead, because that's where we're going to be able to identify the pullback in the markets. We're not looking for a big pullback, but we are looking for a little bit of a pullback. And what I mean by that is if you take a look at the Aussie dollar on the 4-hour chart here, see that the market's moved down. It's moved a long way. If you look at this swing in comparison to the previous swings, we can see that this is a big one. Now, even if the market is going to continue moving to the downside, remember that human beings, for the most part, drive the bigger moves. Okay, I know that there are automated trading systems in there, but there are human beings there as well, and humans built those trading systems. And what they're going to see is that this sort of a move here, you're going to want to take some profits at some point in time. It's gone a long way, so I'm not going to be, too surprised if we see that the market does start to pull back something like this. We'll see that the moving averages start to roll over. But essentially, I'm going to be waiting for the markets to pull back into the moving averages and then identify some other levels from which I can sell from. So essentially, I'm going to, for the Aussie dollar, euro dollar, pound dollar, New Zealand dollar, it's going to be a case of looking to sell into the rallies. And obviously the currencies where the US dollar is the base currency, being the dollar CAD, dollar franc, and dollar yen, then we'll be looking to buy the dips, essentially. But all of those are looking to take advantage of US dollar strength. So as the market starts to pull back here, as you can see, we need to identify some levels from where we can take the position. So I would say that really in and around this sort of zone here, or just above this zone here. So we've got these highs there, or we've got this immediate high over there, is really where we want to be focusing our efforts. We'll take out the bigger levels now, because we're going to play the smaller interim levels. And essentially, we're going to be looking for a pullback into these levels here to then put on our sell trades. Okay, so to sell these markets, to watch them obviously then drop from those resistance areas. The same is going to go for, so I mean, it's pretty much a carbon copy for all of the other pairs. You're looking to sell the rallies. The Aussie dollar sold off the most, as you can see, but even with the euro dollar, pound dollar is a little bit different because it didn't sell off as much this week. But generally speaking, we're looking to sell into the rally. So as this market has sold off a little bit here, we would be looking on the euro dollar for a little bit of consolidation. If it pulls back up into this resistance area at 104.87, then again, we can look to sell from there. But this one, because it hasn't sold off quite as much as the Aussie dollar, then I'd be more inclined to look at a consolidation type pattern. So as the market comes here, if it kind of consolidates around here, we call this the low. Okay, so don't sell through this low immediately going into this evening or Monday's trading, but wait for a day or two of consolidation and then look to sell through there as the market then attacks the 1.0281 or even below there at the 1.0220 area. Okay, so that's the sort of setup that I'll be looking at in the euro dollar. The pound dollar, as I said, that hasn't quite sold off as much as the others as of yet. In fact, if you look at this on the shorter term time frame, you'd almost say that there's a tactical opportunity to buy from this previous level of resistance at 1.2550 up in towards the resistance level at 1.2674, which actually is not that bad an idea of a trade. If you think about it logically, we're looking for the dollar bulls to essentially take a little bit of profit. Okay, and that's going to reflect across all of the major currencies. And if the pound is strong in and of itself, then not only will we have a little bit of dollar weakness from the profit taking, but we'd also have some pound strength there as well. So actually looking at this as a potential buy, whereas the others were waiting for that sell to come in, there isn't really a buying opportunity there. This could be one where you take the short-term tactical buy from this level at 1.2551 up until resistance and then look for the sell opportunity again. If we look at the New Zealand dollar, so this one is very much like the Aussie dollar. It's sold off a lot. So we're looking for a level from where we can sell, okay? And really looking at this chart here, even if we zoom out, I would say that the most immediate level, or the zone really that we should be paying attention to, is somewhere, let's move that there, is somewhere between this resistance level at 0.5723, and then a little bit below there. As you can see, this kind of was previous resistance, became supports at 0.5692. So somewhere in this zone, you can look for a sell opportunity. If it doesn't quite get back there, because this has sold off quite a lot, and if we were to get more of a consolidation type pattern, which we may also get in the Aussie dollar, what instead you could do is wait for the moving averages to roll over as the market pulls back into the moving averages, then sell from there, which will probably be lower than this level here. That's a little bit more aggressive, okay, but it's absolutely the way that the markets tend to play out. We may not get as deep of a pullback as we want here, because that essentially, if we put in the Fibonacci retracements from swing high through to swing low, you can see up there that's about a 61.8 level from a retracement perspective. So we may not get that high. We may get more of a 50% or 38.2 because this is such an aggressive move. Okay, now that's something you get with more experience. Okay, so remember, I've been doing this for 20 years now, so you kind of get a bit of a feel for these things. But if we want to look at things objectively, we put the numbers in there and you can see that really, that sort of a deep pullback is, even though we would like it, potentially that's not realistic. So this is one that you might want to start building into your position. So chop up your positions. Let's say, for example, you usually take a 1% risk. Perhaps you take, two positions at a 0.5% risk, or, 3 positions at 1/3% risk, something like that. So you give yourself the opportunity to be a bit more aggressive initially, but allow the market to move against you and then sell again as better levels become available. Okay, and I know that's kind of contrary to everything else that you would read or understand out there on the internet, but believe me, that is an approach that is very, very effective. It's the one that I teach my my private trading clients, and they've all found that once they've adopted this approach, it's not necessarily as sexy, there isn't as much adrenaline around it, but actually it's more effective and they're more profitable as a result. Now, if we look at the dollar CAD, we can see that this one here, there was a big rally up. So this is going to be a case of essentially looking to buy into the dip. So as the market dips down towards the moving average, I don't think it will get back down to the 1.4265. It might, but I think it's far more likely we get price action sort of, let's move that there, let's get the brush in. We get price action that does something like that. As these moving averages start to roll over, the market will pull into those moving averages, and then there you will look at it as being a buy. And I'm not saying that the market bounces off of a moving average level because they see that there's a moving average there. There's just a tendency for these patterns to play out in the markets. And as traders, that's what we want to do. We want to develop a directional bias, and then we want to look at patterns that alert us to high probability trading opportunities, and then just trade them as many times as possible, and then let your edge play out in the markets. And that is, one of the things that I've observed from the markets over the past countless years of trading these markets. The dollar franc has really sort of started to rally in a big way. It obviously reacted to that big level of support that we were looking at. And this is a reason that I tend to identify at least two levels to trade from. Because if you had have taken, let's go to the daily chart here so that you can illustrates it a little bit better. If you were trading from the daily chart and you took an initial position from here, you probably would have been stopped out of that position. But you wouldn't have been taking into account the bigger levels just below that, right? Which is this level over here that we've been talking about for the past couple of weeks. So by taking my approach to trading the markets, what you allow yourself to do is dip a toe in and take advantage if you get an immediate snap from a level. So a very quick reaction to a level there. But for the most part, you are expecting a little bit more of a deeper pullback. So you put yourself in a position where you're able to profit when you get that deeper pullback and you aren't shaken out of a position. So this one over here, you'd be able to take profit on. The first position would be at around a break even. The second position would be in profit. Your net over the two positions would be a profit, which is essentially what you want from your trading. This is why when I teach people this approach to trading, they have a much better win rate. They're overall more profitable, and it's something that I would suggest that all of you guys and girls look at as well. Okay. Now, finally, we've got the dollar yen. This one is reacting to this big level of support over here. There isn't really an opportunity that I see anyway to trade this going into next week. I'd say if you're already in this position, so if you took that bounce and we're holding it, waiting for it to approach this level over here, if you haven't, then that ship has kind of sailed and you're going to have to wait or focus on some of the other opportunities in the markets. And remember, there are many other currency pairs that you can look at. Obviously, in these videos here, we're just looking at the major currency pairs, but there are other ones that you can look at. There are other opportunities out there. You just take the principles that I'm showing you in this video here and you apply it to other charts, okay? Finally, please remember that this is not trading advice. So I'm not saying go and take these trades, absolutely. I'm just trying to let you know what I'm looking to do with my own portfolio, and it will give you some ideas on what you can do with your portfolio as well, okay? If you like this video, if you found it valuable, please make sure you subscribe to the channel, you hit the bell so that you get a notification, like the video, all of that kind of good stuff. So it lets me know that you are enjoying these videos and it is helping you with your trading. If you have any questions, please feel free to post it beneath the video. Otherwise, I'll thank you all very much for watching, and I look forward to speaking to you in next week's Forex Focus. Take care now.